I'm sure basically anyone who's been unplugged for the last few days will not believe me when I say this, but Warren Buffett just bought a gold mining stock. Where did that come from? Why did he do it? What was he thinking? Did he forget everything in his entire career? Maybe, but let's discuss. So while this video is definitely not a hoax in the sense that Berkshire did file recently that they bought some Barrick Gold, and it is not as part of some ETF, it is the individual stock. That did happen. However, I remain suspicious or skeptical that it is actually Warren Buffett's decision that went into buying Barrick Gold. Now, why is this? Recently, when you look at some of Berkshire's filings, there's some things in there and some actions that Berkshire has done. For example, a buyback recently. They don't do that too often. They own some index fund. Again, odd for Berkshire. And there's a number of other things that make me think that there are, well, we know there are different people that are providing input and to some degrees running money at Berkshire. So I won't pretend to be an expert at the inner workings there, but it would not at all surprise me if this was in part or entirely someone else's decision at Berkshire. Now, I say this because there is a story that I once heard about different, I can't remember who they were, but different fund managers or well-performing money managers, really, that were in charge of some hospital's endowment. And what they were on a board, and the problem was everyone had to agree to make a decision. And so after a period of time, they looked at, well, what has the returns been on the money, and they were like, wow, this is bad. They had a bunch of great money managers producing poor returns. Now, why is this? Well, because your best returns come from taking risks, and if everyone's uh, reticent of taking a particular risk because they think it's maybe not the best choice for a safe investment, well, then you miss out on a lot of returns. And if everyone just wants to buy the same safe thing, you're probably missing out on a lot of potential upside. So there needs to be autonomy in investing, and that's why I believe that even at Berkshire, the people running their own money have the right to run their own money, and Buffett's not going to step in and veto or whatever the setup is. So I think that everyone has autonomy in whatever degree they've been given money. And so in that sense, if one of them wanted to own Barrick Gold, for example, I don't think that it would be vetoed. That being said, for this whole time, for the rest of this video, I will assume that it is Buffett's choice because it's kind of more fun that way and kind of more funny. I mean, realistically, this is comedy, well, gold. So now let's get into the why. Why the heck would Buffett buy a gold miner? Buffett doesn't like gold, doesn't like miners, doesn't like macro, and let's face it, I'll get more into this later, but the gold bull case is mostly a macro case. I mean, you can make the argument that gold is money and price is price, and whatever, if you want cash flow is cash flow. And in fairness, in complete fairness, Buffett bought Barrick Gold, which is a gold mining stock and not gold itself. So he had some quote about gold just looking at you, which is fair. Anyway, why would he do this? Well, I think the hint comes back to a few months ago. I made a video where I was talking about rates, interest rates being low forever. But the words I used were the Fed says something like the Fed says till the end of 2022, but in reality, rates are going to be zero long enough for Warren freaking Buffett to sell bank stocks. Now, if the interest rates are pinned below inflation. And if the yield curve is flat, that is bad for bank stocks. They have trouble making money. But what's it not bad for? In fact, what is it good for? And that would be gold. The thing that just sits there and looks at you while Coca-Cola and Wells Fargo, ironically, are making plenty of money. And yes, I'm having a little bit of fun with this. But anyway, the point is that low real rates are good for well, bullish for the price of gold, I guess we can say, because nothing's good for gold or bad for gold. Gold just is gold. And the most interesting part was the rest of the filing. It's the same, or the other side of the same coin, if you will, because he sold more bank stocks. And realistically, the gold trade, it's short financials, long gold, and obviously that's overly simplified, and it's two of the same positioning. But this is a macro view that you're expressing, that real rates are low, and what are the two effects? What's it bad for? What's it good for? Which leads me to the next part of why I think this is kind of funny. Buffett has historically and repeatedly said that he doesn't concern himself with the macro. I think there's some quote out there where him saying if you spend like 2 minutes on the macro, you're spending too much time on the macro. I think that's a fair opinion. I mean, I spend a bit more than 2 minutes on macro, but it's just a personal choice. Um, but the macro view, I mean, it's not the most complicated thing. You look at how much debt's out there, you look at what could afford to be paid in interest servicing the debt, and I come to the thought that real interest rates must be below inflation. And I've explained this in the past, and I've said this in the past on past videos in terms of the bondholders need to be inflated away to some degree. Now, this doesn't mean that rates stay at zero. Rates could go to 5% if there's 10% inflation. Obviously that's just an example, but the point is low real rates, again, is a macro call, which is in theory bullish. Gold. Now, again, he did not buy gold. He bought a gold miner. Now, I can't remember seeing Buffett own a miner before. I mean, he has owned silver in the 90s, but that was more of a supply and demand thing. But Buffett in general, I mean, I can't remember the particular quote, but doesn't like miners. Someone out there will probably have the quote, but he's talked about the timeline to production being too long, not being good stewards of capital, different things like that. And another thing, and I guess maybe this doesn't apply to gold, but he said he doesn't like commodities because it's always the something about the dumbest producer or the least economically sensitive producer can ruin it for everyone. Something along those lines. I apologize for not knowing the exact quote, and I think it was Buffett that said that, but less relevant for gold. But the point is, he didn't just buy gold; he bought a gold miner, and that's funny. So to recap what's going on, what are things that Buffett has historically either made fun of or not liked? Well, gold, check. Miners, check. Macro, check. Investing outside of your comfort zone? Well, I mean, given the prior three, check. And I mean, someone asked a good question the other day. They asked, what is the signal that Warren Buffett bought Barrick Gold? Well, it, in fairness, is a very small position, about a third of 1%, between a quarter and a third of 1%. But still, what does it signal? And to my point is it's probably a good signal for public relations in the gold mining space. And it might get some generalists to look at gold, look at the gold story, and do some research there and see, okay, well, why are some people just absolutely bonkers about gold, and what is the thesis there? So it might be a positive. Okay, Buffett sees value there, and I mean, if you look at the cash flow and the price multiples that the gold miners are trading at, I can see it. I can see it. And aside from that, they have, well, there was very little in terms of hedge. Now, is it big enough for me to say that, oh, this is Buffett's hedge against whatever? No, not even close. Like I said, very small position. It probably is a signal. And again, remember, they sold off some bank stocks at the same time as buying Barrick Gold, which means likely that someone there, someone running money, might be bearish real rates. So that is probably my view of what Buffett's move is signaling. Now, the final point I wanted to touch on here is something that I've seen a few people talk about or ask, in that why Barrick Gold? Why not just buy, like Eric Sprott, the pounds in the ground, the juniors, get the upside leverage and all the torque you can get? Why not the value of the pounds in the ground, or ounces in the ground, I suppose? And for me here, the answer is tremendously simple. One, those things burn cash, versus Warren Buffett, value investor, cash flow. That's one. Two, and then this is probably the real number one, they're not big enough. You buy every single junior and it doesn't make a difference. Even buying all these shares in Barrick, it doesn't make a difference. Barrick or Newmont really, and maybe there's a handful of other ones, are the only ones that are big enough for an entity like Berkshire Hathaway to consider. You can't buy anything less than a few $1 billion if you're Berkshire. Like it just doesn't work. Anyway, that's all for today. I know I didn't really cover too much in today's video, but I hope you enjoyed, and thanks for watching, those of you who got to this point. Until next time, I wish everyone the best and hope to catch you later. Goodbye.